Hello and welcome to another chapter on US taxation. Today we are here to present on self-employment income. So in the previous chapter we explored investment income, focusing on two important sources of income, which is interest income and the dividend income. We learned how individuals earn income from their financial investment and how such income is reported using the form 1099 INT and 1099 DIV. Investment income represents the passive income, so which is passive earning, meaning that taxpayer earns income from the money that has been invested in the financial assets such as bank deposits, bonds, or the share of the companies. However, many individuals earn income not only from the employment or investment, but also from running their own businesses or providing the services independently. This brings us to another important category of income under the US tax system, self-employment income. Self-employment income arises when individual works for themselves rather than for employer. So instead of receiving the form W-2, which is the receiving wages reported, self-employment individuals generate income directly from the client's customer or the business operations. So examples of self-employment in a individual includes freelancers and consultants, independent contractors, small business owners, and gig economy workers such as ride-share drivers or the delivery partners. Unlike employees, self-employed individuals are responsible for tracking their business income and expenses, calculating the net profit from the business activities, paying both income tax and self-employment tax. So in this chapter, we will develop a strong understanding of the fundamentals of the self-employment income, including what constitutes the self-employment income, different types of self-employment activities, understanding business revenue and the gross receipts, deductible business expense, calculation of the net profit for the business operation, and then definitely we'll also have complete understanding on the self-employment tax. So understanding self-employment income is extremely important because it applies to millions of individuals who operate their own businesses or work independently in today's modern economy. With that background, let us begin and move to the first slide, which is the agenda slide, and we are going to talk about in detail about the self-employment income and the self-employment tax. Okay, so the key agenda that we're going to cover today as a part of this chapter is we'll understand the concept of self-employment income, type of self-employment income, understanding the business revenue and the gross receipts, what are the concept, what are the deductible business expenses and what are the concepts for that, calculating the net profit from the business, understanding the Schedule C, which is the profit or loss from the business. We'll understand the self-employment tax basics and understand how this information is being reported using the schedule SE. And then we'll have a complete example wherein we show that how we have to calculate the self-employment income and then corresponding tax on that, including the self-employment taxes. And then what are the final synopsis and the key takeaways of this presentation. So with this, let's move to the first slide. Okay, now we'll understand the concept of self-employment income. So self-employment income refers to the earning generated by individual who operate their own businesses. So it can be any kind of the businesses which is being executed by the individual, whereby they generate the revenue and they also incur the expenditures to generate that revenue. And then the net profit, which is being derived after deducting the expenses, from the income that needs to be reported. So rather than working as an employer for an employee or for an employer, unlike employees who receive the Form W-2, self-employment individual earn income directly from the clients or customer and are responsible for reporting their paying on taxes. So who is considered as self-employed? An individual is considered self-employed if they operate a sole proprietorship, work as an independent contractor or freelancer, run a small business or professional practice, earn income from gig company platform, the gig economy platform, receive income reported on the form 1099 NEC. Common example includes consultants and the freelancers, accountant lodged in the private practice, online business owners, ride share drivers, delivery service providers, and independent sales agent. So this gives us a complete concept of the category of the individual who would be categorized as self-employed, and the income generated by these set of the individual is treated as the self-employment income. So we'll move to the next slide. Okay, so we saw that how individuals can generate the income in the form of consulting or in form of having their own practice and their own proprietorship business. So source of income is basically for the self-employment income is the business or the independent services, and it is being compared uh, with the form W2, which is like the is generated by the employer. So we have created a quick comparison table here between the self-employment income and the salary income. So source of the income for self-employment income is the business or the independent services, while it is salary income for the employees. Reporting form is Schedule C. It is W2 in the form of the salary. Tax responsibility is paid by the individual. It is being withheld by the employer. Expense reductions, business expenses allowed, and there is no expenses as such, but there are deductions that is being allowed. Basis the contributions or some of the expenses that is incurred by the employee. So when we talk about the component of the self-employment income, it includes the business revenue, which is the gross receipts, total income receipt for the customer or clients for the goods or services provided, which includes the consulting fee, professional fee, sales revenue from the product, and the commission income. Likewise, business expenses are there because once the expenses are incurred, that helps to generate the income for the self-employed individuals. So, ordinary expenses incurred while operating the businesses includes the office supplies, advertisement and marketing, travel expenses, business equipments, professional fees, and then these expenses are deducted to determine the net profit. So, reporting of the self-employment income is the self-employment income is primarily reported in Schedule C. This form calculates the business revenue minus the business expense, which is the net profit, and the net profit is then reported into the form 1040. So this is the final form in which the information is reported, but Schedule C is the basic form which contains all the information basis which net profits is being derived. So self-employment tax is another important component that needs to be reported in the Schedule SE. So in addition to the regular income tax, self-employment individual must pay the self-employment tax, which covers the Social Security tax and the Medicare tax, and this is being reported through Form SE. So example, Sarah is a freelance graphic designer. Annual revenue is 60,000, business expense 15,000, net business income is 45,000. This amount is reported in Schedule C, including the taxable form is 1040, subject to the self-employment tax, which will be reported through from form Schedule SE and then reported finally into the 1040. So we'll move to the next slide. Okay, so now we'll talk about the type of the self-employed income. We understood that self-employed income is generally being generated by individuals who are providing their own freelance services, consulting services, or any kind of the services for which they are charging their clients. So that income needs to be reported via a Schedule C finally would be reported in the Form 1040. Likewise, the people who are making the payment to this self-employed individual, they are liable to report that portion of their income if their compensation exceeds $600 in a form 109 NEC. This is being shared with the individuals as well as with the IRS. So whenever the individual who is self-employed that needs to report the income, that should consider all the information which is there in the NEC form 109 and NEC plus all the income which has been generated by that self-employed individual. So we'll quickly talk about the kind of the income which is being included in the uh, as a part of the self-employed income. First is the professional and the consulting services. So income earned by the providing professional expertise or the advisory services to the client, which includes legal, accounting, IT, financial advisory services, and the marketing management services. Second is the freelance and the independent contractor income, which includes the graphic designer, content writers, editors, software developer, photographers, digital markets. So all these are the income which is being generated by self-employed individuals. So we'll move to the next slide and look at other set of the income that is being treated as the part of the self-employed income. Third income is the small business sole proprietor income. Income generated through business operating the managed by the single individual like retail stores, online e-commerce business, local service businesses, restaurants, food chain, etc. Then the commission-based income, income earned through the sales commission or performance-based compensation like insurance agent, real estate agents, independent sales representative, and then gig economy income, income earned through the digital platform or the app-based services where individual provides services independent. Example, ride sharing services, food delivery services, online freelancing platform, and the home or rental service platform. So many gig workers receive Form 01099 form summarizing their earning. So we'll move to the next slide and look at the another sources of income for the self-employed. So last income which is being included as a part of the self-employed income is the online business and digital income. So income earned through the internet-based businesses or the digital platform, which includes the e-commerce sales, online coaching and training, content creation, and blogging. So to summarize, the kind of income which is being included as a type of self-employed income is the professional services, which includes consulting, legal, service accounting, freelance work, which includes writing, graphic, software development, small business income, which like retail shop, restaurants, business services, commission income like insurance agent, sales representative, gig economy income, which is ride share services and the delivery expenses, and finally the online business income, which includes the e-commerce and digital services. So this slide clearly represents the comprehensive details of all set of the income which is being normally being generated by self-employed individuals and needs to be reported in their Schedule C, and finally this needs to be reported in Form 1040. So we'll move to the next slide. Okay. Now, having understood the concept of self-employed income and having understood what kind of incomes are normally included as a part of self-employed income, we'll spend some time to understand the concept of the business revenue and the gross receipts. So, business revenue commonly refers to the gross receipt, represents the total amount of the money a business receives from its operation before deducting any expenditure. So, for self-employed individual, gross receipts include all the income received from the customer or clients or goods sold or services provided during the tax year. So gross receipts form the starting point of calculating the tax and are reported on the Schedule C, which ultimately flows into the 1040. So gross receipts are nothing but the total consideration which is being received by the individual for providing the services. And then those gross receipts will be subject to the deductions, which are then helped to determine the final net profit. So what is included in the gross receipts? So gross receipt includes the all income generated from the business activities, regardless of whether payment is received in cash or credit or the other form. So which includes the fees received, sales revenue received, commission income received, income from the online sales, services charges, and advance payment received from the customer. For example, a freelance consultant received consulting fee of 50,000, online training income 8,000, commission income 4,000, and therefore total gross receipts, which is being reported to Form C and finally reported in the 1040 form, is $62,000. So we'll move to the next slide and see more details about understanding the business revenue and the gross receipts. Okay, so now having understood what is the part of the gross receipt, it's also important to understand what is not included as a part of the gross receipts. Certain amount received by the business may not be considered as a part of gross receipts, such as the loan proceeds received from the bank, capital contributed by the owner, refund from the supplier, and the sales tax collected on behalf of the government. So these amounts do not represent the earned business income. Importance of gross receipt is there because it is the amount that needs to be reported in the tax reporting numbers. So gross receipts are critical because they are starting point to determine the net profits. Calculation process generally follows the below structure, which is like business revenue, which is the gross receipts minus the cost of goods sold, if applicable, depending upon if it is trading, then there's a concept of cost of goods sold. We derive the gross profit and then we deduct the business expenses to determine the net profit or the loss. So net profit is the amount that become taxable as a business income and reported gross receipts on the reporting gross receipts on the Schedule C. So self-employed individual report their total business income on the Schedule C, which has the following section, which is the part one, line one, gross receipts of the sale, part one, line four, cost of the goods sold, part one, line seven, gross income, part two is the business expenses. So all this information is there in the part of Schedule C, which needs to be reported by the individual for the calculation of the net profit on which tax is being paid by the individual and then finally reported into Form 1040. So we'll move to the next slide. Now we talk about the expenditure which are subject to the deduction or which are deductible while calculating the net profit, and what are those? So deductible business expenses are the costs incurred in the operation of the business that are considered ordinary and necessary for conducting the business activity. These expenses are allowed as deduction because they have to determine the net profit of the business. So self-employment individual report their business income and expenditure using the Schedule C, which ultimately flows into the Form 1040. Ordinary and necessary expenses. These are like two broad category of the expenses which are deducted from the gross receipts. So ordinary expenses are, and ordinary expenses is the common and accepted in the taxpayer trade or business. For example, office supplies used in the operations or marketing and advertising cost, or professional and software subscription. And necessary expenses is helpful and appropriate for the business, even if not absolutely essential. For example, These are the professional training courses, business consulting fee, business insurance, and the common category of the deductible expenses. So, which means that they're not absolutely essential, but these are still required to promote the businesses, and hence this is subject to the deduction. So, common category of deductible business expenses are advertisement and marketing, uh, like online ads and website promotions, office supplies, stationery, printer supplies, travel expenses, professional services, business equipment, communication, rent, and insurance. So these are like expenses which are deductible to determine the net profit. So we'll move to the next slide. Okay. So having understood the concept of ordinary and necessary expenses which are treated as the deductible expenses, it is also important to understand what are non-deductible expenses. So expenses that are not deductible are the personal living expenses, fines and penalties, political contribution, and the personal entertainment expenses unrelated to the business. So reporting business expenses on the Schedule C. So business expenses are reported in the part 2 of the Schedule C, which is like Schedule C line, and then see the expenses like advertising, office expenses, travel, and legal and professional services and utilities. So deductible business expenses represent the cost incurred to operate a business, and they play a crucial role in determining the net profit or the loss for self-employed individuals. So by careful tracking of deductible eligible expenditure, taxpayer can accurately calculate the taxable income and minimize their tax liability. So we'll move to the next slide. Okay. Now we have understood the major type of the income that is being generated by self-employed individuals. We also understood the concept of the gross receipt. We also understood the concept of deductible business expenses and non-deductible business expenses. Now we'll understand the concept of calculating the net profit from the business. So net profit for the business represents the actual earning of the business after deducting all the allowable business expenditure. So formula is gross receipts, which is business revenue minus the cost of goods sold, if applicable, depending kind of the activity. If it is trading, then it is applicable. We'll derive the gross profit and we'll deduct the business expenses to derive the net profit or the loss. So gross receipts includes the total income received from the customer, which includes fees for professional services, products, revenue, commission, income, online business, etc. This amount is reported on Schedule C, line 1. Move to the next slide and see rest of the elements to calculate the net profit. Okay, after having determined the gross receipts, the next step is to determine the cost of goods sold, which includes the cost of raw material, inventory purchase, and the manufacturing goods, manufacturing cost. And when this is being added up, this created a total cost of goods sold, which is being deducted to derive the gross profit. And then we have the set of the business expenditure like advertising, marketing, office supplies, business travel, professional services, software subscription, etc., to determine the final net profit that is being reported. These expenses are reported in the part 2 of the Schedule C. So example is net profit calculation is David operates an online retail business. Annual business revenue is 1,20,000. This is the category of the expenditure, which is cost of goods, advertising, office supplies, website and softwares, and other business travels. So step one is to calculate the gross profit, which is revenue minus cost of goods sold, which gives us a total profit of 80,000, gross profit of 80,000. And step two is to calculate the business expenses, which includes 6,000, 2,500, 3,500, and 3,000, which sums up to 15,000. We'll deduct this 15,000 from the total gross profit to derive the final profit, which is 65,000, which will be reported in the form 1040. So we will move to the next slide. Okay. Having understood the concept of gross profit, net profit, and finally how it has to be reported, we are in a position to understand completely the Schedule C, which is being the major form which is being used to report the information into Form 1040. So Schedule C is used by the self-employed individual and sole proprietors to report income and expenses related to their business activity. This is being used by freelancer, independent contractors, consultants, small business owners operating with the sole proprietors category. Purpose of Schedule C is to report the business income, which is gross receipt, deductible allowable business expenditure, and calculate the net profit of the operations. The final net profit income is used to determine the income tax liability and the self-employment tax calculated using Schedule SE. So structure is part one is income from the business, part two business expense, part three cost of goods sold, part four information on the vehicle expenses, part five is other business expenses. We're going to look at each of these parts in the upcoming slides. So let's move to the next slide. Okay, so part one, which is the income. So this section reports the total income generated by the business. Line one is the gross receipts of the sale. Line two returns and the allowances. Line four cost of the goods sold, and line seven is the gross income. So gross receipts minus returns minus cost of goods sold is the gross income. Part two is the business expenses. This section includes all the deductible business expenses like advertisement, marketing, office, travel, meals, professional services, rental call, utilities, and communication. These expenses are reduced the gross income to determine the net profit. So part three is the cost of goods sold. This section applies to business that sells product or maintain inventory. Cost of goods sold includes inventory purchase, raw material, manufacturing costs. This section has to determine the gross profit from the product sale. So part one, income, part two, business expense, and part three, cost of goods sold. So we'll look at other parts of this form C in the upcoming slides. Let's move to the next slide. Okay, next we'll talk about the vehicle information. So this section is completed if taxpayer claims vehicle expenses for business use. For example, includes mileage driven for business purpose, business-related transportation cost. So taxpayer must maintain the records for the mileage logs to support this deduction. And then part five is the other expenses. This includes the additional business expenses not categorized earlier, like professional membership, training, education, software subscription, business license, which we also discussed as a part of the necessary expenses to maintain and promote the businesses. So example, Schedule C calculation, Sara operates a freelance digital marketing business. Business revenue is 90,000. Various expenses has been listed here. So total expenses is 40,000, 14,000. Net profit is 90,000 minus 14,000, 76,000. This net profit is reported in form 1040 and used to calculate the self-employment tax. So we'll move to the next slide. Okay, now we are going to talk about another important concept, which is self-employment taxes, which we normally, which is being deducted by the employer in case of the salaried individual from Social Security tax and the Medicare tax. But in the case of self-employed individual, this needs to be deducted. This needs to be deposited by them to the IRS. So self-employment taxes is paid by the individual who work for themselves to cover their contribution to Social Security and Medicare. So employer typically share these taxes to the employees. Employer, however, self-employed individual must pay both the employee and the employee portion on these. So self-employment tax is calculated under Schedule SE and is reported in Form 1040. So purpose of self-employment tax, we know that Social Security tax is to provide retirement benefit, disability survival benefit, and Medicare taxes provide health insurance coverage to individuals aged 65 and older. Self-employment tax rate, total self-employment tax rate is 15.3, which is consist of the two portion, which is Social Security tax and the Medicare tax. Social Security is 12.4% and Medicare is 2.9% and total is 15.3. A taxpayer must pay the self-employment tax if they are net earning from self-employment of 400 or more during the year. We already discussed this when we were discussing the taxes and schedule and the payments of various taxes. They operate sole proprietor business or the independent business. They work as an independent contractor, freelancer, or gig workers. Business income used to calculate self-employment tax is determined in the Schedule C. So, which means that if their net earning from self-employment is 400 more, then they have to pay this self-employment tax of 15.3%. So, we'll move to the next slide. Okay. Calculation of the self-employment tax. So the IRS requires self-employment individuals to calculate the self-employment tax based on 92.35% of their earning. So which means that IRS requires self-employment individual to calculate the tax based on 92.35%. So which means that the 92.35% is the amount on which the net profit is subjected, and then 15.3% is the amount on which tax will be calculated. So this adjustment reflects the portion of the taxes that would normally be paid by the employer. So example, self-employment tax calculation. So net profit for the business 50,000. Step one is just the net earning, which is like 50,000 multiplied by the factor of 92.35%, which is like when we apply this percentage is 46,175, and then 15.3% is applied on 46,175 to derive the total self-employment tax of 7063. A self-employment individual receives a tax benefit because half of the self-employment tax is deductible. This deduction is claimed in the form 1040 because if it is a normal employment, then a portion is being deducted by the employer and a portion is being deducted from the employee salary. But since this is self-employed, both the portion needs to be deposited by the self-employed individual, but then they can claim the deduction basis their own contribution. So self-employment income tax is 70363, deductible portion is 3531.50. This reduction reduces the taxable income of the individual. So importance of self-employment taxes. Self-employment ensures that self-employed individuals contribute to the Social Security and the Medicare program, build eligibility for future retirement and healthcare benefit, and maintain the tax parity with the employees. So we move to the next slide. Okay, Now let's spend some time understanding the Schedule SC. So we have discussed about the Schedule C, which has a concept of reporting the income. Schedule SC is to support the taxes, employment taxes that needs to be contributed by the self-employed individual. So Schedule SC is used by self-employed individuals to calculate the amount of self-employed taxes owned by their business. Self-employment tax represents the combination of the Social Security and the Medicare taxes. Purpose of schedule is to total self-employment tax liability, contribution towards the social security benefit, and the contribution towards the Medicare coverage. A taxpayer must file the schedule SC if net earning from the self-employment are 400 or more during 30 years. Taxpayer operates sole proprietorship business and is a form of freelancer, contractor, or the gig worker. So it has two major sections, Section A and Section B. Section A speaks about the used by the most taxpayer for simple self-employment income. Section B is used for more complex situations. So we'll talk about this in detail in the next slide. Okay. So when we talk about schedule SE now, so steps in calculating the self-employment taxes, first we have to determine the net profit of the business, like we normally do, while we'll deduct the necessary and the ordinary expenses, then from the as a business expense to derive the net profit, and then we have derived the net profit. We'll apply the percentage, which is 92.35% to derive the amount on which self-employment taxes will be paid. And then we'll apply that rate of 15.3%, which is the total taxes that needs to be paid. And this is the amount that reduces the 8474. That is the amount that needs to be totally paid to the self-employment tax. Half portion of it is something which will be adjusted during the income from the income to derive the final taxable income. And this fraction reduces the adjusted gross income on which the final tax would be paid. So we'll move to the next slide. Okay. Now, the way the self-employed income is reported through form through Schedule C and then finally reported in 1040. Likewise, the self-employment taxes numbers are being reported through Form SE. So reporting process follow this sequence. So business income, Schedule C, net profit. Then we have the Schedule SE, which is self-employment tax calculation. Then we have Form 1040, which is final tax reporting. So example, complete Schedule SE calculation. So David operates an independent consulting business. Net profit from Schedule C is 70,000. So step one is to calculate the net earning, which is 92.35% of 70,000. Step two is to apply the taxes, which is 9887, which is 15.3%, and then divided by 2 to claim the deduction. So this deduction reduces the taxable income on the Form 1040. So Schedule SC is essential because it calculates social security and the medical contribution for the self-employed individuals, determine the self-employment tax liability, allow deduction for half of the SC tax, and ensures accurate reporting of the business taxes. So we'll move to the next slide. Okay, now we'll spend some time in understanding the complete flow of understanding the concept of self-employed income and then calculating the self-employed taxes. So we have taken a scenario. So David operates as an independent consulting business as a sole proprietor. During the tax year, he earned the following income. So he Schedule SC is the final tax liability reported form. So we'll have a quickly look at the numbers here. So David earned the following income during the year: consulting services, corporate training workshops, and the online consulting income. Total income earned is $1 lakh. Step two is deduct the business expenditure, which includes office rent, marketing, advertising, subscription, and all these. So all these expenses will be deducted to derive the final net profit. So we'll move to the next slide. Okay, so we have a gross income of $1 lakh, and then we have the business expenses of 26,000. We'll deduct this to drive the net profit, and this is reported in Schedule C, and from Schedule C it will be reported to Form 1040. Next step is to calculate the self-employment taxes. To will apply the percentage 92.35% on 74,000, the amount on which self-employment tax will be calculated, which is 68339. We'll calculate 15.3% of the same, and the total tax is 10457. And then half of this is subject to the adjusted to derive the final AGI. So 5228 is the amount which will be adjusted, and this deduction reduces the adjusted gross income to derive at the final taxable income. So we'll move to the next slide. Okay, so we have the final taxable income, which is like 74,000, which is net profit from the business, and then we have deducted half portion of the Medicare tax plus social security tax from this to derive at the final taxable income. So total gross received 1 lakh, business expenses 26,000, net profit 74,000. Net earning for SE tax 68,339, self-employment tax 10457, deductible on half of C taxes, and then final adjusted income, yes, the 68,772. So with this, we come to the end of this chapter, and then we'll have another slide, which is a key takeaway slide. So let's spend some time to understand the key concept that we have learned, and we'll wrap up the session. This is the final key takeaway slide. So what we have learned, we have understood the concept of self-employment income, which is the business earnings, and we also understood the category of the people who are being treated as the self-employed, which includes the consultant, freelancers, gig workers, etc. We understood the concept of the gross receipts represents the total business revenue. We understood the concept of deductible business expenditure that reduces the taxable income. We also understood the concept of net profit, how it is being determined, and then how it is being reported through Form C, Schedule C, and then finally reported in Form 1040. We understood the concept of self-employment taxes. We understood that what amount needs to be paid and how we have to report that information through Schedule SE, and then finally into the Form 1040. We understood the concept of the deduction of the employment taxes, a portion of which is being deducted to derive at the final taxable income. And then we understood the flow of the reporting, which is like we have to calculate the net profit, then schedule is SE is there, and then final reporting through Form 1040. So with this, we'll come to the end of the session. Let's move to the final thank you slide then. Okay. So, in this chapter, we examined the concept of self-employment income, which represents the earning generated by the individual who operate their own businesses or provide these services independently. We learned all the key concepts here, like what is the self-generated income, what is the concept of gross receipts, concept of business expenditure, which includes both ordinary and necessary business expenditure. We understood the concept of net profit reporting via Form C, then calculation of the self-employment tax and reporting via Schedule SE, and then final how these numbers needs to be reported in Form 1040. We understand how this information needs to be reported to derive the final income on which tax needs to be paid by the self-employed individual. In the next chapter, we are going to talk in detail about the rental income. Rental income typically arises from leasing the residential or the commercial property that has been set up for the tax rule. We'll understand the concept of rental income, how rental income is calculated, deductible expenditure on the rental property, and then understanding the rental income as one of the key concepts because person who owns the real estate that generate income from the leasing property. So with this, let us move to the next chapter. We are going to talk about the next chapter very soon in upcoming series. Till then, have a nice day and goodbye.